Good morning, everyone, and quick shout out to our daily listener, Kevin. Hope you're still crushing it in the market. Did you guys get sick yesterday on the ES roller coaster after making 50-point and 100-point swings? Did you know when to get on the ride, or did you randomly jump on the tracks when there was no car to take you along? Let's get prepared for today and our first jobs report of the week. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So when we look at what happened yesterday and where we stopped in the market, again, we watch our line in the sand and then our key areas where our market makers are going to be stepping into the market. And you can see where we bottomed was right where they are flush with capital. Again, they now have everything they need and they can take the market much higher. And that's what we saw right to our minor line in the sand. Our major line in the sand was up here, right to the tick. And then we saw that big defense come in, and then we sold down 100 points. And if these kind of moves are getting you thrown off and you're focusing too narrow, then make sure you're stepping back and getting a full picture. And if you'd like access to some of these tools, again, we do have a Discord room that you guys can join if you want to be able to request certain charts or look for things. So, in terms of today, and again, what happened yesterday, we have insurance ahead of our data. So, we mentioned this at the beginning of the week that we were looking for ADP and NFP to see a bid in that insurance. And then again, for CPI, JOLTS, and PPI next week, looking for that bid. And yesterday we saw those come in. So now we are slightly overinsured for ADP this morning, which is dampening, likely to dampen the response. And really, we're still going to be waiting for NFP to see a bigger spike. So that brings us into tomorrow, looking for that insurance purchasing to come in during the day. And we monitor that minute by minute intraday to monitor the supply and demand so that we can trade that. But we will watch for that because that creates that downward pressure. Same thing will be in play for next week as we've seen these numbers rise, but we will see as we get closer, we'll watch them migrate up into our red zone. And again, we've seen that insurance play out time and again as people get overinsured going into a catalyst, and then it basically makes the storm not as bad as it could be. So from our positioning today, we do have our systematics have come back with a bid, 3.5 billion, and really that's going to be an area that we can look for the market to have more stability. But once we get outside of those, 57.45 on the downside and 58.31, kind of where our Globex value area high is, we are looking at that turning into an offer. And it gets really big resistance once we start to get out towards the tails at 58.62, that turns into 9 billion. And at 58.90, that's 18 billion. So that will be hard to cut through because that's a lot of volume. And then on the downside, that turns into a $12 billion sell at 57.16, but that's also where our market makers would be stepping in flush with capital as well. So same thing we saw yesterday where we come down and that becomes the low of the day. That becomes the area where they are buying. And if you are unaware where that is, then you're playing the game at a little bit of a disadvantage. And that's what this green is represented for here is that same thing as yesterday. It moves throughout the day, minute by minute, and tick by tick based on the incoming order flows that the market makers are taking. And if we look at their positioning, we have our highest position of about $6 billion at 58.09 to 58.14. On the downside, the area to watch is going to be this 57.62 to 58, where we have 3 billion. And then on the upside, where we have an offer right now at 58.47 to 58.55, that is going to be the key area. If we get over that, then we would see that turn into support. And that's the response we'd be looking for. As long as we're under that, we are going to look for resistance as we push up there. And that's what was stalling us out as we made our push up in the London open session. And for our levels, we can see our minor line in the sand here at 58.74. And that's where again, got stopped yesterday. Our major line in the sand is up here at 59.29, and we are going to look for rotational price action between 58.92 and 57.78 with our pivot at 58.31. And you can see again, that's we have our 58.47 to 60 area here, and that's we keep trying to push up, but you can see the wicks on the candles as we keep getting pushed down at our pivot. And our lower targets today will be 57.22 and 56.86. Our upper targets will be 59.50 and 59.85. Now, the one thing to make sure that we really pay close attention to again is those election level lows. And where we want to check that the most is on the cash index. And if you look at the S&P, and actually go to the SPX, that level is 56.94 on the cash index. And the reason we pay attention on the cash index as opposed to the futures is on our futures contract, we get a difference in the contract value. So our numbers constantly shift. So pay attention to 56.94 on the cash index in the coming days, weeks, and months, because if that breaks, that is going to be your signal that much, much larger downside is coming. But with that, guys, have a great day trading. Be sure to control your risk. As traders, that's the number one thing that we can do is protect our capital and protect ourselves in trading. We can't guarantee how much we make, but we can guarantee how much we lose based on our risk management and our trading parameters. So be safe trading these next few days because as we are below our line in the sand, we do see those bigger swings, cleaner moves, and much wider ranges. So don't get sick on the roller coaster today.